Welcome to another one of our Money Talks video casts. I'm Jerry Slewsowicz, your host, trying to help you become a better investor with some of these videos. The date today is September 19th, Monday, and we're in that rough season. I mean, historically, from the second week of September through the end of October is historically the more difficult times of the year. That doesn't guarantee anything because last year it actually was a pretty good time, but consistently over the years there's a higher probability of difficulties in this time frame than in other time frames of the year. With that said, some of the big problems and issues facing America today is that the economy is slowing down. If we look at the economic reports, they're all getting weaker. Some of these things are actually showing negative growth, which is already showing a deceleration or an economy in a recession. Certainly direction counts. If you look at the direction, we've gone from up here and we're kind of scaling down. Some of the numbers are barely hanging on to show slow growth. In Europe, the situation is even more tenuous. The debt default crisis of some of the sovereign countries, in particular Greece, is being watched very closely. Many banks over there have exposure to that Greek paper. Many of our money markets and banks over here have exposure to their banks over there. We are in an interconnected world, and so the events over there have effect on the events that happen over here. There is no real solution yet to the Greek debt crisis. In addition, if Greece decides to default on their debt, Italy, Ireland, Spain, Portugal, the dominoes will be watching to see how things work. Historically, a country that defaults ends up not having to pay back all their debt. That's actually kind of good for them. Much like a bankruptcy for somebody over here. I'm not saying it's good for the country, but it might be good for that individual person. Those other countries might say, hey, look, we want the same terms. That's one of the big problems that they're having over there, is there's no real solution to coming up with solving the many sovereign countries that have these issues. So with that said, the market went down from late July to early August. About August 9th, we bottomed out. Since that time, we've seen a series of higher highs and higher lows where we formed this kind of a pattern up, flag pattern up. We're kind of on the high end of that range heading into today. That's why we're selling off this morning, that and a lot of the other reasons. The Federal Reserve Bank meets, the Federal Open Market Committee meets on Wednesday. They meet Tuesday, Wednesday. On Wednesday, the 21st, there'll be a big announcement in terms of what the Fed is going to do. There is the potential that they disappoint investors. They're talking about this Operation Twist, where they're going to sell short-term paper in their portfolio and buy long-term paper to keep interest rates down. Interest rates are already low. So what we're hoping for, well, not me, but some investors are hoping for, is more Federal Reserve Bank intervention. Myself, I'd rather see the chips fall where they may. Let's stop the government intervention, etc. President Obama, he's got his jobs plan, his tax cuts, not tax cuts, his deficit cut spending in place. Now we're going to see Congress vote on that and argue about that. Some of these things coming to the forefront may cause investor concern and may cause problems. Near term, I think there's a risk that we go lower rather than higher. We're kind of positioned on both sides of the fence right now with some cash. If things do go down, there's a chance, like the fall of 2008, that all asset classes go down. That did happen. Bonds went down. Gold and silver went down. That can happen going forward. It's very important to be very observant of your portfolio today. If you don't have stop losses, if you don't have a safety net under each position, it's a good idea to talk to somebody who employs that strategy to help you out. We all hope that the markets and the economy and everything recovers and goes hunky-dory, but there's a chance that it doesn't. There's too many things. A slowdown here, there's sovereign debt issues where we might have defaults in Europe. That could lead to a spiral down fairly quickly. If banks fail in Europe, that will have a very quick effect on our markets. I'm not trying to panic anybody. We do have long positions as well. Make sure you have a safety net under there. We're kind of both. We've got long, short, we've got bonds, we've got commodities. We're all over the board. We've also got a fair amount of cash as well. It's important at this point in time to play the potential for many results, and when they start to prove itself true with price, you take appropriate action. Again, my name is Jerry Slewsowicz. Sign up for our free no obligation newsletter up above. Look at our website frequently, and we'll up this video cast as we see necessary. Again, good luck with your investments.